What's going on, guys? So in this video, I wanted to take a quick look into Tesla and really break down their financials, what's going on with the company, how quickly is the company growing, and pretty much open up the conversation with, do I think Tesla is going to go bankrupt and hit $0 a share, or do I kind of feed into the, the Uber bull case, let's say, from Cathie Woods and other investors like that are expecting Tesla to hit $4,000 a share in under 5 years. So I'm gonna try to take it apart and really look at, based off the company's financials, how both of those realities are actually relatively plausible. And I know a lot of people, if you're a bull or a bear, you generally just assume that, okay, Tesla's going bankrupt or Tesla's going to the moon. There's only one of those two things. But both sides have a lot of validity to it, and I don't think either sides really give that enough thought. So I'm kind of gonna break down exactly what's going on with Tesla. I'm gonna be doing it on this financial statement that is going to be gunning based off of all their 10K numbers, turning that into non-accounting BS that financial analysts are able to look at, and have a better understanding of where the money is actually going. And then based off of that, based off the assumptions you're gonna make for Tesla in the future, you're gonna be able to find out how much Tesla is currently worth right now. So if you guys are interested in that, make sure to stick around, hit that like button, hit the subscribe button, and without further ado, let's get in the video. Do you see that? Shocking, right? That I can still buy LaCroix after owning the company. Thankfully, this investment, one of the worst investments of my life, is not the topic of this video, so shut up. Now, when we take a look at Tesla's income statement and balance sheet, because these are essentially the biggest financial statements that actually have any real validity into looking into the company, in my opinion. And so right now, I took all of their numbers based off of Morningstar, which I have checked, and they're pretty much exactly what is stated on each of Tesla's 10Ks. It's just easier to grab it from this way. You can see that the company, over the past, say, 5 years, has been growing their top line at an extremely fast rate, while also burning through more cash than the US government. So there's not really much else you can say about that. So Tesla, as we all know, and I'm not going to go too deep into exactly what Tesla is. I'm sure if any of you are watching this, you know and you have a pretty good understanding of what Tesla is doing. And if you want a really in-depth version of, like what Tesla's doing and what they could be doing, go check out my boy Jeremy with Financial Education. I'm sure most of you guys that found me have definitely found him. Whether you agree with him or not, he does go very in-depth with Tesla and talking about Tesla stuff. And then also Hyperchange TV, that guy is also really good at going really in-depth with Tesla, and definitely those two people are probably way more versed with all the things that could go right with Tesla than me. So if you really want the nitty-gritty, go to them, not me. But essentially, if you are looking at Tesla as a company and you're not expecting to understand exactly, the chemistry behind their batteries, if you're not expecting to really understand, what is the end consumer's mindset when going to buy a car right now at the peak of an economic cycle, and it's going to be a Tesla. If you're going to be like me and assume that you can have a decent understanding of that, but you're not going to know everything there is to know about that stuff because of how diverse Tesla is, you essentially have a couple of major factors. You have Tesla as an auto business, which a lot of bulls will say don't value Tesla like an auto business, and I definitely agree with that. I wouldn't say like the bears that just qualify that Tesla is an overexpensive like Ford. I don't really think that they're paying too much attention to the company. But so right now that's the biggest revenue driver for the company. Next one will be the software side of Tesla, which is essentially what makes a Tesla a Tesla. If any of you have gone on to the Tesla's website and where you're able to build your car on the website, which is freaking cool, mind you. You pretty much pick it out like you're gonna buy an iPhone or a Mac, and then you can get, you pay like $35,000 for the Model 3, but then there's a little button that's like self-driving and autonomous, the smart package, which is another $6,000 on top of it. So essentially, you're not gonna buy a Tesla and not buy the features that make a Tesla a Tesla. Like, you're buying a Tesla for it to be electric and for it to be self-driving. So you're doing that. So the fact that why a lot of people are trying to, look at Tesla and analyze Tesla as a software company, totally get it. However, you need to make an auto sale to sell that software, so it's a bit of a hurdle. So I definitely wouldn't call them a straight-up software company. But I digress. The other major section of their business that's kind of ramping up is their lithium battery supply. So obviously you have the Gigafactory, which is the world's largest lithium battery manufacturer in the world, and now they're making 3 of them. So I definitely think Tesla is going to be, probably the #1 place to buy a battery 10 years down the line, even if the car business goes to all hell. I definitely think Tesla's battery business is going to stick around. How many of those they burn through with building the cars, who knows? That's a big thing up in the air. But Tesla was able to shift standards into their new chemistry-based lithium batteries. And while I'm not going to go too far into the chemistry because I don't really like chemistry and I never really paid attention to it that much in school, essentially the standard that Tesla jumped on a few years ago with making their batteries for the Model S is now what is going to be in every single other auto manufacturer that's making an electric car. So I definitely think there's validity in the auto business, the software business, and in the battery business. And personally, I also see a lot more validity in their solar projects if they ever get back to working on their solar roofs. And that's not even including the taxi network that ARK Investments has anywhere between a $1 and a $2 trillion market cap. Now, obviously, Tesla won't have a $2 trillion market cap, but just the thought of Tesla gaining 20% of something like that is pretty astronomical. But in my opinion, that smells too much like the dot-com bubble. So anything that is like based off of an assumption, I'm going to just kind of rule that out and not even look at that stuff. So I'm looking at the businesses that are currently existing, and Tesla is currently making money off of it. In a couple of years from now, if they roll out their taxi network, we can revisit it. But for right now, I want to take a look at just what Tesla's doing with the stuff that's already in motion, and then how likely that's going to start to really making them money. So anyways, taking a look at Tesla, over the past 5 years, like I said earlier, has been growing at such an amazing rate. And now when you look at a business, there are a couple of different fields of how people want to analyze a business, and they want to structure around the moat of a business. In my opinion, a business is focused around 2 main points. It is focused around how much money it's bringing in, so the sales and the amount of products it's moving, and then the cost for doing that. Those 2 things are what you need to look at when you evaluate a company, in my opinion, because sales, no matter what's going on, are going to drive growth. Assuming they can make sales and they're not spending more than they're making based off of that in order to produce those sales, the company will do well over time. However, in Tesla's case, Tesla, as you can see here, as I break down all the different metrics in their income statement, so you have flat revenue, which is at 100%, and then all of the other statements that I've put onto here are based off of a percentage of revenue. So you can see right here, which is just essentially the operating expenses, which is all the costs that go around with like running the actual business. Tesla is always burning just a little bit more than their sales every year. And so last year they had their costs were 101.2% of their overall revenue. So obviously they lost revenue year over year. And the year before that was even worse at almost 114% of their revenue. So currently when you look at Tesla right now and you look at Tesla like this, you just see something that is losing money hand over fist. When you look at their top line growth though, when you look at the 4-year, the 3-year, and the last 2 years, and their average compounding growth rate, they're growing their revenues at an extremely fast rate. And there's 2 sides to this. Like, okay, are you fueling, your revenue growth with a lot of debt and a lot of, just ramping up production and slashing sales, slashing prices with sales in order to push out more product? Or are you just expanding very quickly and you don't have time to really be profitable? Both camps are pretty valid, but for right now, the way that it's looking at is that Tesla does not make money. And if you want to do any type of discounted cash flow, return on investment, anything like that, you need some form of return to the investor. Otherwise, it's, worthless. Because again, what I talked about in my previous video is that you have 2 types of assets. You have one that produces cash and one that doesn't. And one that doesn't produce cash, there is no real value to it. It's just whatever you're willing to pay for it. Something that, produces cash for the investor, you can discount that and get a fair value for it. And then depending on what someone's willing to sell it for you, you can either buy it or not. And so with Tesla, everybody that's in it right now and has been in it, the past couple of years, isn't betting on Tesla right now staying Tesla right now. Now, obviously, everybody thinks, okay, yes, Tesla is going to grow and continue to grow over time. But what they're really betting on is that Tesla can continue this revenue growth that it's been going through right now and drastically cut costs. And that's the biggest thing that I don't see a lot of Tesla bulls focusing on. Is there's a lot of what ifs and there's a lot of different avenues that their business can go through. And now, mind you, I'm a huge believer and supporter of Tesla. I used to own Tesla years and years ago because I believed in the company so much, but then I realized that it was going up 70% in a few months and I didn't know what the heck was driving that, so I just sold out of it. And I also spent, a year of my life focused on learning about climate change and developing solar panels. So I am definitely all for everything that Elon Musk and Tesla are doing. I'm just looking at this as an investment and looking at, the direction that the company seems to be going in. And now, so what people are buying, and you have two camps of people. You have people that are just in love with Elon and his dream, and they want to put their money in Tesla because they want to see, some good happen in the world, and, us not kill our planet in, 20, 30 years. Or you have people that are banking on a hyper-growth story. Now, in order for that hyper-growth story to work, in order for it to be like real cash that's going to be brought back to the investor, you need to have this happen. You need to have this cost number start to go down and below 100. And when you see that, keeping all the other estimates pretty similar with what has been seen throughout the rest of Tesla's past, all the estimates after costs are relatively negligible for how much they impact the amount of money that Tesla is worth. So say if Tesla is able to drop down their costs to about 90% of their revenue, and that means that their net income is 4.5% of their net income. Now, when you compare this to another auto manufacturer, this is definitely doable. You can even look at, say, a Ford or a GM. They're generally at a 95. So Tesla needs to be a little bit more profitable than that, but I believe it's right there. If Tesla becomes 1% profitable, so meaning that their costs are only 93.5% of their revenue, by the time that it's trickled down, and they get a 1% net income, assuming everything else is kind of the same, and they're able to maintain these growth rates for the next couple of years, the stock price, at fair value, based off their calculated WACC and this tax return and this tax rate, which doesn't really work for Tesla, but whatever. And assuming their long-term growth rate is like every other auto manufacturer, like a very slow grower due to the cyclical nature, if they're able to maintain their growth for just a couple more years and drive costs down so that they are 1% profitable, Tesla is ballpark valued at about $300. Now, surprisingly, if you look at Tesla not too long ago, Tesla was valued at this number just back in December. Now, the reason why it started to shift was because Tesla had a couple of quarters that they were extremely profitable, and everybody thought that, okay, Tesla's going to start making money now. So everybody got really bullish. Everybody thought that, okay, things are going to look up. And then miraculously, things didn't, and their costs ended up being larger than their revenues. And everybody was shocked, and now, due to a lot of other things going on in the global environment, people are just, hitting on Tesla and, saying that now the narrative is that Tesla is going to go to zero. It's just a matter of when. And I personally don't think it's that simple. And in my opinion, if you look at the 2 quarters that Tesla was profitable, Tesla's, when you break them down into this type of format, when you look at their last couple of quarters, the quarters that they were profitable in, Tesla's costs for sales were actually 82.5%, which, mind you, if they're able to expand what they did for a couple of quarters and really get their crap together and really figure out their logistics and understand that, okay, we're going to be selling this amount, we're going to be producing this amount, and they continue to only have their cars created as they are purchased. So, they essentially copy what the business model Dell was when Dell was new, and Dell made all the computers, supply and demand based as far as when they manufactured them. As long as they keep it like that and they're able to do all the autonomy things, like say in the Gigafactory, and they're able to pretty much not have to pay for running electricity, the more autonomous features that get implemented into the actual manufacturing of each of these vehicles, they'll be able to drive down costs exponentially. Will it go down to this 82.5 number, period? I don't know, and I don't think anybody else does, but it's a ballpark bet on what people are making. And if you look at what happens when I turn their costs into 82.5% of their overall sales, you see that magic $4,000 a share number that people like ARK Investment and like Jeremy from Financial Education and other people that are uber Tesla bulls figure out for the value of the stock. And they're like, well, this is going to be a 20 bagger right now. In my opinion, I don't know about that. Them hitting this number, it needs to have a lot of things going right. Now, on the flip side, if they're able to get that profitable, but they go down to, a not nearly as fast growth rate, and they say go to a 15% growth rate, you still have a 3-bagger. Now, I personally think that if Tesla is able to bring their, costs down, I don't know about, them selling, increasing revenues at a 70% rate, but increasing revenues at a 15% rate for a company like Tesla that is as diversified as Tesla is in a space that is as new as the EV market is, I definitely think 15% over 4 years before it tapers off to 1.5 for perpetuity, I think that's very doable. And that's why I actually think that Tesla is, if you have an asymmetrical risk-reward type of mentality, I do think that Tesla is undervalued, and it should be between a 3 and a 4 bagger right now, assuming Tesla does not go bankrupt. Now, there's a big if, and I know you guys watching this are probably like, well, Dan, you're just being an idiot, because Tesla's probably going to go bankrupt. And in my opinion, I can't really say that you're wrong, because, Tesla is hurt. They're raising capital, which thankfully will, keep their doors open for a little bit longer, more than the 10 months that they had prior to that. Things are going to have to start looking better for Tesla, and I'm pretty sure that things are going to start looking worse before they look better. So there you are with that. Now, personally, I will say, and I'll just disclose it with you guys, I did open up an M1 Finance account, and since you're able to buy fractional shares there, I did put some money into Tesla. Not even more than the equivalent of 2 shares of Tesla. Not a lot of money. Granted, I don't have a large stock portfolio, but I do not have a lot of money in Tesla, because Tesla to me is a pure gamble, and it's something that if I fast forward 5-10 years from now, I'm either going to walk away with $0 or I'm going to walk away with a 5 to a 10 bagger, and that's all I really care about. Tesla is a company that I do believe in, and I would like to put my money into it to see if it could help. So it makes me feel good, and it also has a very asymmetric risk-reward type of situation. And the reason why I say that is because no one knows. Obviously, it's not an investment; it's a speculation, because there's an ability for me to lose 100% of my capital, and I get that. But I don't really care, because this is never going to be in the top 10 largest holdings of mine. This is never going to be something that I'm get defensive on if someone comes at me and says that, oh, well, this stock is completely overvalued and you should sell it. I'm not putting my money in it, the little amount of money that I'm putting into it, as an investment. It's more of a speculation, it is like that hope in that dream stock. But now it's 50% cheaper than it was a year ago. So, if I wanted to put any money in Tesla, I think right now is a good time to do it. They're trading for, less than 2 times sales, which is pretty ridiculous for a growth company. Generally, growth companies get valued because there's no cash flow to discount it back. They generally get based off of their price to sales. And for a software company that it does make no money and doesn't have really fast growth, their average valuation is about 10 times sales. So then you have a company like Tesla that definitely has more publicity than any other company needs or wants, is only trading at 2 times sales. I don't know if that's a smart idea for the market. I think it's definitely worth right now if you want to take a speculative position. And then definitely, if you understand that, no, it's not an investment because there's nothing for me to discount back and there's no cash flow yet, it's a hope and an opportunity. But if you're like me and you're young and you have a few years to kill and a couple $100 extra, you don't really, nothing is needed that $100 for, I would throw it at Tesla. I am throwing it at Tesla. So, that's just kind of my overall takeaway with it. I don't think Tesla, whether you pride yourself as being a value investor, pride yourself as being a growth investor, speculator, swing trader, whatever it is, I don't think anybody in the market really knows how to value Tesla. Same way that no one in the market knew how to value Bitcoin. And then Bitcoin, it goes from $1,000, $20,000, back down to $3,000, and now it's back up at around $9,000. So no one really knows, and when things are this parabolic going one way or the other, probably not going to go one way or the other for very long. So that's just kind of my takeaway with it. But this is why I believe that a lot of people are kind of misunderstanding with like why, you know, the people that say like when Morgan Stanley says, okay, Tesla is going to become $10 a share, and then their bull case is $300 a share. It's really because of how quickly Tesla is growing, but their costs are just growing that quickly as well. So it's really like until that breaks, you know, if they're able to reduce costs and keep their same amount of revenue increases, the company will become one of the largest companies in the world, hands down, like no question asked. Do I think they can do that? No. But do I think they have a higher chance of becoming profitable than going bankrupt? Yeah. And based off of them becoming 1% profitable, and it's a 70% return from right now, I'll take that chance. And that's just kind of my takeaway with it. Let me know what you guys think in the comment section down below. I know some of you guys are super pro Tesla and some of you guys are super bear Tesla. I just kind of want to hear your thoughts about it. And no, do not tell me that Tesla is going to become a $2 trillion company, because for right there, I do get being bullish for the company like Tesla, but calm down with that. But yeah, let me know what you guys think in the comment section down below. Hope you guys got some use out of this, and let me know if you guys really want an in-depth analysis on how to use a spreadsheet like this. If you guys want, I will detail a like say 30-minute walkthrough on how you create this spreadsheet on yourself, and then I will put up a template that I can share with all of you guys so that way you guys can start analyzing stocks using this on your own time. Thanks again, and I will catch you guys in the next video. Peace.